How's it going, guys? So next I'm going to be going over leverage and position sizing for futures trading. So to start off with the futures leverage, I'm going to go a little recap of what we went over in our first video. So 1 mini is equal to 10 micros in the futures world. So 1 NQ mini is equivalent to $20 per handle that mini moves up or down. So for example, if NQ is at 19,000 and it moves to 19,001, then your long would go up 20 handles or your short would go down 20 handles. 1 NQ micro is $2 per handle. So as you can see, 10 micros is 1 mini. If you can do the math there, that is 10 micros at $2 per handle. That's $20 per 1 mini handle. And ES is the exact same, except 1 ES mini is $50 per handle and 1 ES micro is $5 per handle. So this is the recommended proper position sizing for your funded accounts. This is an in general kind of gray area because it depends what strategy you use, what RR you have, and what certain indicators you use, how long you hold the trade, etc. There's a lot of outstanding factors that go into this, but this, for everybody in my Discord and everybody using my content, this is what I use for my account sizing. Now this is through Apex that I've used, TopStep, My Funded Trader. There's several different platforms that have all different sizing of accounts, so I tried to cover most of them here. So for a $25,000 account, I do 2 to 3 micros. $50,000 account, I do 4 to 5 micros. And then 75 is the 6 to 8. The 100K account is 1 to 2 minis. 150K account is 2 to 3 minis. 250K is 3 to 5 minis. And the 300K is 4 to 6 minis per trade. So for this, I will never ever really buy 1 mini. The only time on the 100K that I will buy a 1 mini trade is when I have one set take profit, and it's usually a quicker trade. It's like, okay, if I see this signature, I'm out, but I'm looking for this target right here to get smacked. I won't hold that for long periods of time because when I have multiple imbalances or previous highs, lows to attack on my market maker model, I don't want to just have one trim because I like to trim all the way down, and after that first initial trim, that's when we'll set our stop loss at break even. We'll secure a little bit of profits, and we'll let that trade ride for us risk-free. So proper position sizing for live accounts. I would risk 1.5% max per trade. This is following what ICT said. He's going through a series where he's teaching his son. I think that's a really important lesson to never risk more than 2% per trade. He lowers it to 1.5%, and I really like that. So never allow yourself to lose over 3% of your account in one day. This is the rule that we follow on my Discord. We have 2 trades and we're off. If we lose 2 trades back to back, we're done trading for the day. Now, obviously, we only trade the New York morning session. We sometimes go into the PM session. I don't personally trade it, but we have we have traders in our Discord who alert in the PM session. I personally, if I take 2 losses in a row back to back, I've hit my daily loss limit, and that might not be the daily loss limit that your funded account or your prop firm sets for you, but you need to set those rules for yourself because those will mean more in the longevity of your account. So for example, we have a $10,000 live account. I would only risk $150 per trade max. And then I would have a 2 loss limit per day. That way, if you lose that $300 per day, that's 3% of your account. Now, this 1.5% is harder to do when you use prop firms. I definitely think it's attainable, especially with the position sizing that I offered in the last slide. But really try to stick to that 1.5% max per trade because yes, it might not look a lot when you make $500, $600 on a 150K account on TopStep, but that's a lot more than you would make at your daily job where you're going to work fast food, going to work for a corporate job where you will not make $500 a day. If you are, then you should consider if trading is even for you, and if you can make money easier somewhere else, switching over. Obviously, when you scale up in this community, you'll be able to make more and more every single day, but your risk leverage also comes with you and you could lose more a day. Also, one last key factor to keep in mind, always make sure you know your risk to reward. So coming back to this slide, right now I personally trade 2 150K accounts. I will only trade 2 to 3 minis per trade. I'll never trade 1, but I'll always do 2 to 3. Now what makes me decide between 2 to 3? If I have a play where my stop loss is anywhere between 10 to 20 handles, which means I could lose up to 10 to 20 handles, I will take 3. If it's over 20 handles, usually between 20 to 35 range, then I will do 2 minis. And obviously my target would have to be bigger on the downside / upside because I would need my RR to still be profitable. I average about a 1 to 3 to 1 to 4 RR on my trades. Obviously I have some outstanding ones that are 1 to 2s or 1 to 1.5s, and then also 1 to 7s, 1 to 8s, 1 to 9s. But my average is a 1.3 to 1.4. I believe that if I trade that 2 to 3 minis every single day, 2 minis if it's less than 20 handles, or 3 minis if it's less than 20 handle stop loss, 2 minis if it's over 20 handle stop loss, that's the way that I will be profitable. Make sure to size in correctly and make sure to calculate that daily loss limit of 3% based off of how much stop loss you can afford, not how many contracts you have in the trade. Thanks for hopping on. See you in the next video.